What if I told you that while everyone's chasing Tesla and NVIDIA at sky-high prices, there are three robotics companies trading for less than the cost of a dinner date that could be building the future right under our noses? We're talking about robots in space, underwater submarines with mechanical arms, and autonomous drones that literally live in boxes waiting for their next mission. And here's the kicker. You can own a piece of all three for less than $60 total. I'm about to show you three robotic stocks that are so undervalued, so cutting edge, and so positioned for explosive growth that by the end of this video, you'll understand why smart money is quietly accumulating these names, while retail investors are still obsessing over overpriced tech giants. But first, hit that subscribe button and ring the notification bell because we're diving deep into the future of robotics investing, and you don't want to miss what's coming next. Welcome back to Profit Pro, where we uncover hidden gems in the stock market before they become tomorrow's headlines. Today, we're exploring a sector that's about to explode: frontier robotics. Now, I know what you're thinking. Robotics? Isn't that just industrial automation and manufacturing? Wrong. We're talking about robots that go where humans can't: the depths of the ocean, the vacuum of space, and hostile environments where one wrong move could be deadly. Here's why this matters right now. While AI has captured everyone's imagination, robotics is where AI gets its hands dirty, literally. We're at an inflection point where autonomous systems are becoming economically viable, and these three companies are positioned at the forefront of this revolution. Before we dive in, let me ask you this: are you part of our community yet? If you're serious about finding the next big investment opportunity before the crowd, smash that like button and subscribe because we post market-moving content every week. Plus, drop a comment below and tell me, what's your biggest robotics investment question? I read every single comment and often turn them into future videos. Here's what makes this opportunity so compelling. The global robotics market is projected to reach $230 billion by 2030. But here's the secret sauce. Most investors are focused on the obvious plays like Boston Dynamics or the big industrial names. These three companies we're discussing today are operating in what I call blue ocean robotics, markets where there's virtually no competition, massive demand, and incredibly high barriers to entry once you establish yourself. And here's the beautiful part. All three are trading under $20 per share, making them accessible to any investor, regardless of portfolio size. Quick disclaimer before we continue. This is not financial advice. Always do your own research and never invest more than you can afford to lose. These are speculative investments with high potential rewards, but also significant risks.
Let's start with our first pick, Redwire Corporation, ticker symbol RDW. Think of Redwire as the Amazon of space infrastructure. While SpaceX gets all the headlines for launching rockets, Redwire is quietly building everything you need once you get to space. We're talking robotic arms, 3D printers that work in zero gravity, solar panels, and life support systems. But here's where it gets really interesting. They've just pivoted into defense with their Edge Autonomy division, developing military drones called the Stalker and the Penguin. These aren't your average hobby drones. These are autonomous systems designed for the U.S. Army. The numbers are staggering. Redwire just posted 50% revenue growth year over year, and they're sitting on a $356 million backlog. That's not hope and dreams. That's contracted revenue already in the pipeline. Here's what most investors are missing. Redwire already has contracts with NASA and the European Space Agency. Their technology is literally operating on the International Space Station right now. When you have that level of validation from the world's premier space agencies, you're not a startup anymore. You're an essential infrastructure provider. The catalyst I'm watching? Any major contract with Axiom Space or additional ESA partnerships could send this stock from its current 13.13 range back toward its 52-week high of 26.26. Risk factors? This is a steady climber, not a rocket ship. Revenue growth is strong, but predictable. The defense pivot is still new, so execution risk remains. My take? This is your sleep well at night robotics play with serious upside potential. Now, let's talk about our second pick, and this one's been on absolute fire. Ondas Holdings, ticker ONDS. This stock has gained over 500% in the last year, and here's why. They've created what I call drone-in-a-box warfare. Picture this, a hardened box sitting in a field somewhere. Suddenly, hostile drones appear on the radar. The box opens, an interceptor drone launches automatically, captures or destroys the threat, returns to base, and recharges, all without human intervention. This isn't science fiction. It's happening right now in Ukraine and the Middle East, where swarms of drones have become a major tactical threat. The growth story here is insane. Ondas went from practically zero revenue to 10.1 million in a single quarter. That's a 582% increase. But here's what really caught my attention. Smart money has been loading up on call options, with unusual options activity spiking 160% just last week. Their Iron Drone technology, yes, that's a play on Israel's Iron Dome, is a game changer. It's completely autonomous. You deploy it and forget it. The system monitors airspace, identifies threats, and responds automatically. The market opportunity is massive. This isn't just military. Hospitals, airports, critical infrastructure, even private estates can benefit from autonomous drone security. The total addressable market is growing exponentially as drone threats become more common. Here's the kicker. Analyst price targets range from $17 to $25, but remember, this stock was trading at 50 cents just a year ago. We're still in the early innings of this growth story. Risk factors? High volatility, geopolitical dependence, and the stock has already run up significantly. This is definitely not for conservative investors. My take? This is your high-risk, high-reward momentum play with serious technological moats.
Our final pick is the most speculative, but potentially the most rewarding, Nauticus Robotics, ticker symbol KITTT. Imagine robots that swim like submarines, operate at depths of 2,300 meters, and can perform complex repairs with robotic arms. That's exactly what Nauticus has built. Here's the problem they're solving. Offshore wind farms, oil rigs, and underwater cables require constant maintenance. Currently, this means sending human divers into extremely dangerous conditions or deploying expensive manned submarines. Nauticus robots can do this work autonomously, safer, and for a fraction of the cost. The addressable market is enormous. Offshore wind energy is exploding globally. Aging oil infrastructure needs constant maintenance, and the underwater cable network that powers our internet is growing exponentially. Now, let's address the elephant in the room. This stock is currently trading around $1, making it technically a penny stock. The chart looks volatile because of multiple reverse splits, but here's what matters: the underlying technology and market opportunity. The company is at a critical juncture. They've grown from $400,000 in revenue last year to $2 million last quarter. They need one major contract with a company like Shell, Chevron, or a major offshore wind developer to prove their business model at scale. Here's why I'm cautiously optimistic. The certification to operate at 2,300 meters is significant. That's deeper than most underwater infrastructure exists. If they can prove their robots save money while improving safety, this could be a massive market disruptor. Risk factors. This is absolutely a make or break year for the company. Cash position is tight, and they need major contract wins to survive. This is only suitable for aggressive risk-tolerant investors. My take? High-risk speculation with potentially transformative upside if execution succeeds. So how should you think about these three opportunities? If you're building a robotics portfolio with a $5,000 budget, here's how I'd approach it. 60% in Redwire, RDW, your stable growth foundation,
30% in Ondas, ONDS, your momentum play with proven traction, and 10% in Nauticus, KITTT, your lottery ticket with massive upside. Key catalysts to watch: Redwire, major space infrastructure contracts or defense wins; Ondas, international expansion and civilian market adoption; Nauticus, major oil and gas or offshore wind contracts. Remember, these are frontier technologies with real volatility. Never invest money you can't afford to lose, and always do your own research. Before you go, which of these 3 robotics plays interests you most? Drop a comment below and let me know your thoughts. Are you bullish on space infrastructure, drone defense systems, or underwater robotics? Don't forget to hit that subscribe button if you want more hidden gem stock analysis like this. We are constantly uncovering opportunities in emerging technologies before they hit mainstream radar. Until next time, keep building that future-focused portfolio, and I'll see you in the next video.